Good day everyone, this is your European Open briefing for Monday, October the 17th. I'm Rafi Boyajian, currency analyst at xm.com, and we're going to be looking at what's happening in the currency markets today. So it's a fairly quiet start to the week. We're seeing most major pairs extending Friday's moves. With the dollar hit a fresh 7-month high early in Asian trading today, and that came on the back of comments by Janet Yellen on Friday, where she suggested that the Fed may opt for a high-pressure economy in order to let growth overheat a little bit in order to make up for the weak growth since the financial crisis. This boosted the long-term the yield on long-term bonds and as well as the dollar. We had also some more fairly hawkish remarks from Boston Fed President Eric Rosengren, and we also had some comments from Bank of England's Deputy Governor Ben Broadbent, who spoke on BBC Radio earlier today. So let's have a look at what's happening with the dollar. With the dollar index hit a fresh 7-month high of 98.17. We can see in the chart that that's the highest since around mid-March. Against the yen, the dollar is holding comfortably above 104, while the euro has slipped below the $1.10 level. We had some mixed data on Friday. It was, but the market did kind of were fairly pleased. Retail sales were in line with expectations. The core component of the retail sales measure was weaker than expected, although on the whole, markets didn't see anything too bad about the retail sales data. We did also get some positive producer price data out of the US. Producer prices rose at the fastest in nearly 2 years, and this is due to as the effects of the dollar's previous gains start to wear off, and we start seeing energy prices go up. That's pushing up producer prices, and that will likely mean higher headline inflation over the coming months. The main focus this week for the dollar will be Wednesday's presidential debate, it's going to be the last of 3 debates between Hillary Clinton and Donald Trump, and this comes as Hillary Clinton enjoys an increased lead in the polls following the scandals over comments on women and accusations made against Donald Trump over the past week. Now let's have a closer look at what Janet Yellen said. She suggested that the Fed may let inflation rise above target by supporting easier policy in the near term in order to let growth run a little while, to let the economy heat up a little bit in order to repair the damage from the financial crisis. She said that she kind of hinted that the Fed is looking at having a high pressure economy, and this boosted the yield on long-term government bonds. We can see here that 10-year yields on US government bonds shot up after her comments to around about 1.805%. They've since eased a little bit. Basically what this means that if the Fed allows higher growth in the near term, it will eventually mean higher interest rates over the long run, and that's been seen as a positive for the dollar. And of course, we had more hawkish remarks from Boston Fed President. He once again made the case for a near-term rate hike in order to prevent the labor market from overheating. Now the pound, we can see that it's stuck below $1.22. It's firmed a little bit from Friday's lows. On Friday, Bank of England Governor Mark Carney said that the bank is not indifferent to the value of sterling, although he did once again stress that the bank will likely tolerate overshoot of inflation in order to prioritize growth and employment over inflation, while the UK economy absorbs the Brexit shock. Early today, the Deputy Governor Ben Broadbent said that inflation will likely exceed 2% in 2 years' time, and said that the pound's recent fall is an important shock absorber. So while it does look like the Bank of England is keeping an eye on the pound, they're not overly worried just yet about how low it's fallen in recent weeks. The pound is likely to stay in focus over the next few days. Tomorrow we've got UK inflation data. Wednesday we've got the UK unemployment and earnings data, and on Thursday we're going to have the latest retail sales figures. So those are things to watch out for. Let's have a quick look at oil prices. We see oil has dipped back below $50 a barrel. On Friday, we had the Baker Hughes rig count for the US. Oil rig counts in the US rose by 4 to 432 in the week to October 14. This was the 16th straight week of gains, and it does show that on the one hand, US oil rig producers are benefiting from slightly firmer oil prices, but also it does mean that they are adapting to being able to produce at lower prices. So the oil did come under pressure after the data, but also markets are keeping an eye on the OPEC meeting in November, where the OPEC producers and Russia will likely agree to some kind of a deal to either cut or freeze output. Just a quick reference now to the Australian dollar and the New Zealand dollar, because we do have some data coming up tomorrow. For the Australian dollar, the RBA, the Reserve Bank of Australia, will publish its minutes of its September meeting. So that will be of interest, mainly because the Reserve Bank of Australia has taken a slightly more neutral tone recently. So the markets will be looking just how neutral the RBA is shifting towards. On the other hand, the New Zealand dollar, that's been under some pressure recently. It's slightly firmer today. It's up around 0.4% against the US dollar. We've got the latest quarterly inflation data out of New Zealand in the early hours of tomorrow. So that will be keenly weighted by the markets because most market participants expect the AUDNZD to cut rates over the coming weeks. So an unexpectedly weaker reading will likely fuel those expectations. So those are the couple of things to watch out for the Australian and New Zealand dollars. Now, before we go, let's have a quick look at the calendar. We had earlier today industrial output data out of Japan. These were the revised figures for August. They were revised slightly down from 1.5 to 1.3%. The main data in the European session will be the final inflation reading, final estimate for September for the Eurozone, and that's likely to be confirmed at 0.4%. Last month they were 0.1%, so if confirmed at 0.4%, it will support the argument that the Eurozone is finally out of deflationary spiral. In the US session, the main data will be industrial output and manufacturing output data. They're expected to show positive growth in September following a contraction in August. That's it from me. Thank you very much for watching and have a great day.